All righty. All right, guys, coming in a little late, so I'll just get started right from the get-go. Hopefully you can hear me. Someone give me a yes if you can hear me while I'm getting started here. Welcome to the Hurley Investments Market View Commentary of October 9th, 2023. So, what do we got going today? What do we got going from last week? And what are we looking at for the rest of this week? That's what we're going to talk about. Just to recap a little bit, I wanted to show some of the bullet points that we had from last week's briefing, big picture, some of our big issues, and we can probably add a couple. Student loan payments are set to resume October 1st, which is, a week ago. Oil prices are still high. High gas prices. U.S. government seemingly looks headed for a shutdown. They've kicked that can down the road 45 days. Of course, we're probably closer to 39, 37, 38 days into that. Or excuse me, 37 days left in that. Disinflation momentum has slowed. In other words, the rate of inflation coming down, that's called disinflation. It started to come down quicker and more recently has lost some of the momentum. China's post-COVID economic recovery efforts have been sluggish. UAW is about to enter its third strike week against the big three automakers. Keep in mind this was a week ago. So the Fed, ECB, Bank of England, and many other central banks all seem to incline to keep rates higher for longer. That's something that's going to be a problem for a while into the future. Lag effect of prior rate hikes has yet to show up in a meaningful way in a broad sense. So what does that mean? Our rate hikes up to this point, it's hard to tell how much of a damper it's put on earnings growth and the economy. And it's also hard to gauge how well it has put a damper on inflation. Obviously, then the main reason or the main point for that is the fact that they being the Fed feels that they have to keep the rates up higher for longer because they're just not seeing enough of what they want to see with regard to inflation and slowing down the economy without causing a recession. So let me do a little search here. Let's do UAW. There we go. Strike update. Someone has searched this before. Oh, Fox 2 Detroit. Negotiations continue between the UAW and big three automakers. Avoided having more facilities added to the strike late last week. UAW president said the union was prepared to expand its strike to a large General Motors facility in Texas. That was averted when the automaker agreed to add its electric vehicle battery manufacturing plants to the UAW National Master Agreement. Said we were about to shut down GM's biggest moneymaker in Arlington, Texas. We know their pain points, we know their moneymakers, and we know the plants they really don't want to see struck. Blah, 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 blah. Negotiations remain strong, ongoing. We will continue to work toward finding solutions. When was this written? Let's see. Today. So this is still a problem. Let's go back and see what else. China's still a problem. Wanted to see a lot better recovery out of COVID that they just haven't delivered. Yeah, I think we've covered enough for those. So maybe one bullet point we could add. Since we've got that list there. So over the weekend, Palestine in the form of Hamas. I know they're two different things. Hamas is a terrorist organization. They broke in, flew in on, I want to say parachutes, but that's not the right word. Paragliders. And Hamas inciting heavy reactions from Israel. By kidnapping, killing, etc., etc. So we opened fairly low this morning on that news, which I thought was a bit of a surprise, even though it's kind of bigger deal than normal fighting between the eternal fighting between Israel and Palestine. It's still just kind of within that location, as it usually is, contained, I should say, within that location. Not necessarily something the market should be overreacting to. And then, of course, what did the market do after it dropped a bit? Steadily grew back up towards the end of the day. So apparently the market agreed with me. But it is one thing. Not as important as some of these others, but we're adding that to the list. Anyone want to add anything else to our list of concerns? So I included this week's big picture from briefing. I included the whole thing for you guys. We're not going to go over the whole thing, but just to give you a bit of a summary of it. Basically, they're pointing out that earnings revenue, excuse me, revenue on earnings reports has stayed up and gone up with companies, and earnings has steadily declined over the last couple of years because companies are paying more for their products, or paying more to develop their products and produce their products thanks to inflation. And they're pointing out that analysts are starting to see earnings begin to, or expect to see earnings begin to turn around and outpace revenue. Outlook for 8% earnings growth was supplanted by an outlook for a decline in fourth quarter earnings. Analysts see a ramp in earnings growth in calendar year 2024. So what it all means, I recognize the rough patch and the down turn in the market over the last couple months. They estimated a 20% discount in the 10-year average of 12-month earnings. So I'll read this part. In brief, there was been multiple compression driven. What is multiple compression? Multiple refers to the earnings multiple, or how many times more than the earnings you're paying for the future estimated earnings growth. So when that gets compressed, they're just talking about how much people can justify for paying more for stocks. So there's been multiple compression driven by rising interest rates that have stirred valuation angst and have posed a competitive headwind for stocks. The valuation angst is tied up in worries about future earnings growth, but as the chart above shows, those worries have not registered in analysts' aggregate earning estimates. That understanding is why the third quarter earnings reporting period holds added significance for any potential rebound effort. The reason being is that third quarter reports, in many cases, will contain guidance for the fourth quarter and maybe even for the calendar 2024. It is those projections that will matter most, as they are the door to the market's assessment of whether current estimates will be revised higher or lower. So all they're talking about, earnings reports coming out for the third quarter, obviously through this next month and into November. On those earnings, companies give their guidance, and if they start to give their guidance, which is where they see the company growing and where their numbers they expect to hit over the course of the next year, they revise those guidance numbers up. That's going to be very good, obviously, and will push our stock market up, and obviously will hurt it if they don't. What could push those guidance numbers down? The knowledge of higher interest rates. What could push them up, as we talked about above? Hopefully things getting a little cheaper to produce and margins less strained. Companies able to keep more of the money they earn from that higher revenue. Lots of words, lots of wordy sentences. What are your questions, if any, about any of this stuff? Any thoughts or worries? Keeve, none of this made any sense. That's okay too. So, as Kevin has been a bit tied up, oops, didn't want to do that. I already have that. What have I been helping your portfolios with? What have I been doing? And Kevin and I, what have Kevin and I been talking about back and forth as he's had time? He is again still at still with family in Texas with the passing of his niece, and going to funeral services today and tomorrow. So we talked about last week, again, if I could just use this to block what happened all of last week. We were about here. And my comment on this chart of our S&P was, I don't like the market still hasn't gotten down to a 200-day moving average. And I would like to see more towards that end before taking protection off, taking profits on protection, and looking then towards earnings coming up. So what do you know? We came down there basically the next trading day, Monday. Let's see. Monday was the 2nd, wasn't it? This was Monday, of course. That's when we were talking about it. Then Tuesday came down here. Didn't quite make it, but we held very close to that 200-day moving average. I took protection off of Disney and Baidu. Let me say copy this font down here because this is not what I want to use. That's not what I want to do either. I hate this formatting. Let me try this again. I hate Microsoft Word. That's really what the problem is. There we go. Disney and Baidu protection. Wonderful profit. That was as we were starting to bounce here, I believe. Came down a bit today, but that was pretty awesome to see these few days here bouncing from 127, kind of a little support level there. Obviously want to see it get up here to 200 day, but we're also getting this death cross coming up. So hopefully we'll be able to see a little bit of a run to go at that before protecting Baidu for earnings, because they're usually a little later. Disney is coming on November 2nd, I think. It's either the 9th or the 2nd, so that one's also a ways off. But look what it did here. Bounced off of just below 80. Huge 3-day run. Not only did we book a profit on Disney puts, but also, let me rephrase this, purchased 100 Disney shares for everyone since we've booked profit a few times on puts. They were back here at 85, 86 for quite a while, bounced on their earnings, came back down, tried to hold it. Once it broke here, we had 88s on for a while, came up, and we had 85, 86, something like that. So we've been able to accumulate some book profit and accumulate cash to go towards a little bit of Disney shares, which is obviously what it's all about. Love to see it hold above the 50-day moving average, closing above it today. Let's see where it goes tomorrow. In fact, I'm going to just look on my phone to see what the extended hours. Disney, oh, it's down slightly, so it'll fight to hold on to that 50-day. We'll see what that's like tomorrow. Futures on the indexes are up slightly. Then we booked some profits last week on Bank America, and the one of you that has JP Morgan shares, we booked profits on those puts, and those were excellent profits. Bank of America, I think we had 28s, closed them down here last week, Friday I think it was, at around 26, couple dollars of profit, which is big for a $26 stock. And the first time it's been oversold in quite a long time. That was the justification. Here's our oversold on our RSI. And then Since Bank of America and JP Morgan start to report here earlier in the earnings window, I got protection back on Bank of America and JP Morgan for earnings. So I basically rolled those down, but I was able to get protection on a bit higher and book a little more profit on our puts than if I had just rolled it straight down. Booked a profit, let it come up a little bit, put the puts back on. This couldn't have been done much better than we did it. Same idea here. Justification was hitting this 140, 141 support level, starting to bounce on that. I think we had 147s on, something around there, and got 145s on for earnings here on Friday, I think, for JP Morgan. Love seeing those movements and decisions. What else has been going on? Just to give you guys a little bit of an action update. Let's just go through Apple coming up to this 50-day, have 175 puts on. Thought about taking those off to let it run, but now we're at the 50-day where it probably will hit and come back down. If not, that's our signal to take those off, let it run a bit, and see if we can't protect it closer to 182, 185. Boeing has just been oversold for so long. That really hasn't been an indicator yet to take protection off. I mean, if we had taken protection off when it went oversold, it would have been over here. We had booked a 220 put profit down here. Or I should rephrase. We booked profit on a 220 strike puts for our Boeing shares. Down here at around 209, 210 as it hit the 200-day. Once it started to move below that, we got on 205s, and that's what we've got on right now. So obviously missed a couple dollars in there, but overall we're making up the lion's share of this really crappy downward movement on Boeing. And I just want to see a base being built here at 185. It's trying to do that. Couple up days. It's the first time in a while we've had 2 up days in a row. But may see a run for earnings and a hope of good news that Boeing's taking care of their production issues. Talked about Bank of America, Baidu, we talked about. Disney chart, talked about that. Ford, we've sold our Ford, but thinking and looking about maybe getting put Ford back on for people at around this price level. Just on the idea that if we get a deal for our UAW, United Auto Workers, and all that other stuff, that's kind of put a damper on that. Hard to overlook a $12 stock for our little accounts that could go up to 15. But haven't done anything with that as we have gotten rid of that. Some of you have Google, gotten puts off of Google. Unfortunately, those were not for a profit, but it's holding this 50-day and I couldn't justify keeping those on. But we did book a nice profit on 140 covered calls for you folks with Google, which paid for that protection at the very least. I think we've actually booked a profit a couple times on covered calls, which is nice. We can't get above 140. We're going to put some more covered calls back on, and we're getting puts on for earnings here coming up at some point. Talked about JP Morgan. I won't do that. Do want to look at LMT, Lockheed Martin. I always want to say Lewis Machine and Tool Company. Go ahead and look up that company if you're a fan of owning guns. Lockheed Martin had a huge 7-8% bounce today. Boy, did we have protection on it the stupidest time ever. Jim, are you here? You've got to be here, aren't you? Jim's here. So Jim, bad news. Had to take puts off for a loss. Good news, LMT is kicking trash with the news of escalation in Israel. So we'll get a chance, obviously, to protect this higher. That one looks great. Huge up day for LMT. Meta. Man, we had 300 puts along here for a while, and it just wouldn't ever tell us if it wanted to fall below the 50-day or stay above it. Went above, below, above, below, above. Then pretty much told us we needed to take those off. Unfortunately for a loss on those ones, on the idea we need to get those back on probably at 325 to get set for earnings. And our last one, Under Armour. Took an awesome profit for Under Armour on 750 puts. Trading down here around 650, 660, where we took them off. Awesome profit. Could give us another chance again as we booked another profit on those Under Armour's puts to get more shares on there. So I hope that little rundown helps you guys see that things are still happening. We're still taking care of our stocks, still doing what we need to do in our Hurley Investments team. I will put Under Armour, so I forgot that one. And this pretty much sums up what I'm doing. To be honest, I'm not terribly optimistic about the next month. I like to see the market bounce just as anyone would, but I'm just playing the directions and looking for our best spots to be protecting. Earnings coming up, a lot of stuff on the 24th, 25th, 26th. JP Morgan on the 13th, Friday the 13th, the horror day. Baidu in November. Where's our other one? Under Armour in November. Disney, I think I said the 9th. November 8th. So we're getting towards the point where a lot of these need protection, and hopefully we can let some run a little bit pre-earnings runs. Any questions about the management of stock protection that I just went over? Anything that you guys would like to see or are worried about? Getting our indexes on here. I really ought to clean up my desktop. I got a question from Renee. Overall, are you pleased with the direction of everything in any way you think the war will affect stocks? So obviously, if there's greater escalation, what you want to be keeping your eye on is if we do what Senator Lindsey Graham suggested, which was to bomb Iran's oil refineries, because apparently Iran funds a lot of the terrorist organizations such as Hezbollah and Hamas, which I don't think that would happen, but those are the kind of things that might escalate it to a more of a international conflict rather than a localized one. But today, I mean, no, it hasn't. You can see by what I explained earlier, market was down at the beginning of the day, opened down and just steadily went up. And so the market kind of overlooked it, which tells you that big money thought it was a little overblown. Get my NASDAQ. Got another question here. Give me just a second, Bill. I get this one up. Bill said oil stocks are going up due to war, as are weapons manufacturers. Yeah, you definitely saw that with Lockheed Martin. In fact, I want to go back to Boeing. Should have helped Boeing, and it did, but just a tiny sliver. I mean, I would have thought Boeing would have taken off a little bit more, maybe not as much as Lockheed Martin, but I mean a little bit. So that was another reason why I just wasn't ready to take protection off of Boeing, because it just hasn't told me that it's really ready yet. I'd love to be wrong there, and we still have plenty of room to take a nice profit. Oh, okay. Let's see. Just going over our indexes. And to answer your question again, Renee, I like where stocks are going, but I guess that doesn't really matter. I'm just following what it's telling us, bouncing on a support level, and then looking at stocks individually and looking at their charts and making decisions based on that, weighing our news, generally economic and global news, and individual stock news. That's the name of the game. Dow, probably still technically bearish, but it's bouncing, obviously. Just we could say that generally for the rest of them. Still haven't crossed this line on the RSI on our Dow or the S&P. Just barely touching over it on the NASDAQ. So I think I got to keep these bearish, but they're turning positive. I'll say higher, just because that's where things are going. Any bit of news to the contrary, and we've got a little dead cat bounce, and we're going to test this 200-day. And I'm probably looking at getting protection on earlier for earnings. But right now, the market is holding up nicely under the circumstances. I think this was supposed to be 1. 2, as that was Monday. I'm going to say 10, 9, 2023. I think I'm sticking with my up 1%. I think we're going to get an up and down October, but it's possible our earnings are going to be positive enough. So I'm sticking with that number. Earnings this week. Let's check that out. Calendar here. Delta on Thursday. Domino's Pizza. Friday, we've got a little confused why we're not seeing JP Morgan, so I got to double check on that. Oh, that's why. Let me just try again here. Nope, still doesn't like that. Which means, gotta double check here. October 13th. Twelfth, 13th, really weird that they don't have a confirmed date. But that's what we're planning on. Extremely weird. Okay then. Let's go to our calendar, economic calendar real quick. Inventories tomorrow. What are inventories? Wholesale inventories. What those businesses have, companies have in their warehouses, products, etc., etc. Wednesday, the 11th, we have mortgage applications, PPI, core PPI, FOMC minutes. So I'm going to say PPI, FOMC minutes. Thursday, the 12th, more inflation readings, which is obviously going to be important. Initial employment claims, continuing. Usually those go together, so I'll leave that out. I'll go EIA, gas, and oil inventories. Friday, import, export. So how am I looking to trade? Following market direction and getting protection on as needed at higher strike prices for earnings reports. So another thing that obviously might throw a wrench into the up week is going to be our PPI and CPI Those are our big inflation measures. So that's going to tell us a lot. Any questions? Questions on any of this stuff? Anything else I've said? And Bill, just to follow up with your point about oil stocks going up, yeah, so that's obviously coinciding with weapons manufacturers with the Middle East conflicts, which is why it makes sense that if we're going to be doing something crazy like bombing Iran, oil refineries, that's going to be a big escalation. Don't plan on that happening, but all right. Had this article that I thought was pretty interesting talking about central banks and how it all started kind of with the Bank of England funding their wars abroad way back before the US was a country, and then we started to follow suit a couple times until President Andrew Jackson out of Tennessee put an end to that for a while. Basically points out every time we've had central banks and a Fed, it has caused unnecessary waves in our markets, has caused, or at least has been part of the depressions, Great Depressions ever since. Thought that was interesting. Take a read for that one. If you go off of the great economist Thomas Sowell, Sowell. He's my favorite economist, he's just an amazing thinker. Goes through socioeconomic and history and tons of stuff. Analyzes facts and evidence, and just an incredible mind. He's worth looking up for anyone. I'll just write it here, Thomas Sowell. Look up Thomas Sowell on the Fed. So he's a brilliant mind. A lot of people don't hear about him for whatever reason, but he is one of the most brilliant economists and minds of our time. And he said, when asked about the Fed, as he was criticizing it, what should we do about the Fed? He said, get rid of it. It's only made things worse. And he was asked, what would you do to replace it? And he said, that's sort of like asking a doctor, an oncologist, what you're going to do to replace the cancer you've just healed someone from. You don't replace the cancer with something, you just get rid of it. pretty interesting comment on the Fed, but that article kind of goes along those lines. Abraham's a big fan. Yes, you know what you're talking about, Abraham. One of the few ex-Marxists that converted. Totally true. I really love all the things he talks about and says. Just look him up on YouTube. You'll be lost for hours in some of the great interviews he's done. All right, guys. I'm going to say homework. A lot of stuff on the YouTubes. All right. Any other questions, thoughts, concerns? Thanks, Jim. All right. Thanks, guys. That does it for me then. Appreciate the comments. Appreciate the questions. Kevin should be back this coming Monday, I believe. I'll probably still be doing Thursday's webinar. So please join me on that Thursday morning, 10 o'clock a.m. Mountain Standard Time. And we'll see you then. Thanks, you guys. Thanks, Abraham. All right, take care.